Piper with the weekend video clip, and it's Saturday the 31st of March. Before I start on the markets, I want to mention one point. As you know, I'm expecting a bear market. It could have already started in some markets, although I wouldn't be surprised if others still have new highs in them. But the risk reward on equities, I believe, is now not attractive. There's not much potential for upside, and at the same time there's a lot of potential for quite severe downside. That's not a good investment mix. Asymmetrical returns, but obviously in the wrong direction. When I hold an equity, I want to have limited risk, and I want to have solid reason to expect decent returns, maybe 300% plus, sort of general guide. Now, we're having this conference on the 30th of April, and because of the bear markets situation and because of the importance of managing investments, we're going to include a section, quite a long section probably, on this kind of thing. It'll fit in quite well actually with it'll fit in well with the Elliott wave theory and crypto strategies and such like. And if you're holding money in a SIP, then you want to get the allocation right at this time. Otherwise, it could be quite serious for your financial future. I mean, a bear market can be a very positive experience, and many people have got very wealthy out of bear markets. It's all about how you approach it and how you plan for it. So it's important to me that my clients get real value, and I think this is a time when I can add a huge amount of value, because it's just critically important that you aren't in the wrong positions. But right now, equities look to me like there's just no point being in them, at least the majority. Obviously, special situations are different. I think gold stocks are different, but they've gone too high up. There's limited upside potential, if any. And if you look at this chart here, the S&P 500, you see the 200-day moving average has been critically important with catching those lows there. Now we're right on it here. On the S&P, as with the Dow, in fact, we have an ABC here. And then another ABC to there. So I think it's likely we're going to see this is going to be a C wave down. So we've got 1, 2, 3, 4. I think we're going to see a break. I think it'll probably be a contained break. So the high in the S&P is 2880 there, 80 higher than that. So 80 points below here takes down to about 2440. So maybe move down to here, just to break this, these levels, give the impression of something happening. But I think we may well see it contained. The reason being that this is an ABC decline. So whereas the C wave can be a lot bigger, the wave pattern suggests otherwise. Now we have different patterns on the DAX, which we'll look at now. Alright, turning to the DAX, again the daily chart. So the 200-day moving average has got broken cleanly earlier. And now the 50 is actually crossed below it, which is, I believe, a death cross. Not sure precisely what levels one uses these things, but so we had the peak here. Now we've definitely got 5 waves down. There's no real doubt about this. I think probably that's so it's like again 1, 2, 3, 4, and 5, and then a wave 1. Although this could be an irregular wave 1. In fact, an alternative A, B, C, wave 2, I should say. So it's a pattern from there which becomes important, around just below 12.5. So if we count this, get rid of that. If we count this peak here as the wave 2 rally peak, then got a 1, a 2, 1, 2, 3, 4, 5, and then a 4 and a 5 down to there. So that can be a complete 5, a bit messy, but that can be a complete 5, followed by clear A, B, C, which also looks pretty complete, really. Now, if this starts to fall away next week, it has the potential again to be a possibly serious move, which might take out these lows. That would, of course, tie in with the S&P doing something similar. So next week I'll be looking to short the DAX if we see a sell signal. So look at the very short term. Right, well, there's no real form to the move off here at the moment, but an acceleration down early next week would be of concern, but also an opportunity to go short, which looks like it might be a worthwhile trade. Alright, FTSE similar to the DAX, so we had the peak up there. We then had a 1, 2, 5 waves down to there, 3 wave, then a 4 and a 5 to complete 1. A very subnormal 2 with this count, but it does seem to be the best count at the moment, followed by a 1 wave, which also subdivides quite well into 5. And now there's quite a sharp ABC rally. So again, there's a case that we're going to see a reversal next week. I mean, as we all know, these things are never certain, but low risk shorting opportunity should present itself at some point. Should be worth taking. I can't say will be worth. Let's go down a leg here. Right, so from this low here, A, B, C, B wave, and then it's possible to count 1, 2, and then 1, 2, 3, 4, 5. That's wave 3. 4 here, and then a 1, 2, 3, 4, 5. Again, rather messy, but we have got this quite nice reversal from the big round number 7-1. So we peaked up there, fell back. Again, I'll be looking to sell this come. Sorry, not Monday. It's Tuesday with a bank holiday. There may be some trading on Sunday. I'm not quite sure, but I may want to wait for the market itself to open on Tuesday. Right, we now look at gold. Firstly, let's see what happened to gold during the last bear market. I wrote Financial Cataclysm Now back in 2006, predicting or forecasting, if you like, the bear market that started in 2007. I think it was around here, roughly. So between 2007 and 2008, gold virtually doubled from 500 odd to 1,000. There's a very nice triangle, in fact, I recall, around here, which will be more obvious on longer term chart. I think it's in the book actually, probably, my book Trading Triangles. So it did pretty well, then it slipped back again. I think probably the time when I may have a bit of a bounce in equities, but when the real panic set in, gold did very well. In fact, it continued to do very well until 2011 or so. So my case for gold isn't actually based on the bear market. My case for gold is based on fiat currency devaluing, like the Roman denarius did back in the day. But a bear market, certainly on the case, this particular bear market, did suit gold as well. This is a monthly chart, by the way. Let's get down to a shorter term chart. When we look at the technicals, I think the biggest technical issue at the moment is this resistance level around sort of here between 1360 and 1380 around here. So that's one side of the wedge. There's also something of a trend line here. It's not exactly exact, but it's not so bad if you ignore this one here, which blipped below the 200-day moving average here, which has been providing some support. So the key levels at the moment are around 1320 down to around 1280, I think, where the moving average in the middle. So a fairly right now it's still possible you could see that, even though we had a very nice rally. It's still, as it failed to break above this line here, it may want to retest this one again, and that would give the opportunity of getting it at better prices. I would certainly add to my positions if that happened. Look at the wave patterns here. This at the moment is an ABC, A, B, and then a 1, 2, 3, 4, and then a 5. If this rally here is corrective, i.e. like an ABC, that would be a 4 and then a fifth wave coming in. That would certainly suggest we're going to go lower. So I'd rather that held really, but if we do see that, we see it. That would be followed by an ABC rally perhaps, and then another leg down, which would then probe those levels I've been talking about. We have got this ABC here, followed by this rather messy B here. So although this does count pretty impulsively, it could be a C wave. So that does allow this further decline to come in before we see the actual rally that I'm expecting to see. That's gold. Right, we're talking about bear markets. Bitcoin has seen a large fall, as we all know. Low at 6,000 is now critical. Basically, we have a possible 5 there, 5 waves up, suggesting it's impulsive, followed by an A, B, and now a C. So it all rather depends on whether that can hold. We have got these two moving averages, 250-day, trying to cross. This is a death cross situation. The kind of noises coming out of the community is pretty negative at the moment. A lot of people are giving up, as it were, tired of this, but I'm not sure it's quite enough yet. So I think there's certainly a case we're going to go lower and give us even better prices to buy in at, and it should be a very low risk, profitable buying opportunity when it comes. It's just a question of whether you want to allocate. Again, coming back to my earlier point about bear market asset distribution, diversification, allocation of what you want to be in to achieve your own financial aims and goals. Personally, I think that cryptos have a part to play. They can provide very solid performance when they go up, and they can provide very solid downside performance as well, obviously. So a small allocation in a portfolio, I mean maybe 5%, I went in with only 1% I think when I started, but it quickly took on a larger significance up here somewhere, which has shrunk a bit down here somewhere, but I did take some profits. I put one of my Bitcoin into the Lux trading fund, which has been doing very well, Bart Smets, and also gave my wife a credit card. She was spending Bitcoin at nice high prices, which was fine. Anyway, so I did reduce my exposure. I've been adding a bit recently, but the pattern is not clear at the moment. I mean, I could tell you what, I think there's a 5 here, and that's what ABC down to here, and got some kind of sign of life here, but we need more really to be convincing, and at the moment we haven't got that. Right, well, I hope some of you would like to come along to the conference on the 30th of April. I think we'll be discussing some pretty important stuff. Feel free to get in touch, email or telephone, if you want to know more about what we're going to be talking about and how it might benefit you. Otherwise, thanks for listening. I hope you enjoyed this report. Have a great weekend, holiday weekend, and bye for now.